Bloomberg Media reported a 135% increase in revenue in 2020, including a substantial ad revenue growth, fast-growing subscription model, familiar video. Those of you who are on Twitter a lot, I think are very familiar with their Quick Take series, which I think has done extremely well there, but also forays into a number of new content verticals. Leading that charge is the Chief Growth Officer, Scottie Havens. He's a Gold Star veteran of digital media. I've been talking with Scottie Havens for many years, all the years that I've been covering media, from Yahoo to Atlantic, Condé Nast to Time Inc. For the last 5 years, he's been at Bloomberg, where he's been, but he has always seemed to specialize in digitizing legacy media. And interviewing him is our own famous veteran of the marketing and media trade, Joe Mandese. He's our editor-in-chief at MediaPost. Joe's been covering the industry since 1979 at just about every trade publisher that matters. But for the last 17 years, we've been lucky enough to have him here. Joe, how you doing?
Good. How are you, Steve?
What do you got on your head there? What are you wearing?
Pinehurst.
Pinehurst.
From a previous MediaPost summit.
All right. That's right. You're missing the golf. I'm going to just turn it over to you, Joe, and Scottie.
Sure.
Scottie, good to see you again.
Nice to see you, Stephen.
Hello, Scott.
Hey, Joe.
Well, it's good to have you. Both you and I are virtual, obviously. I'm trying to be hybrid with the hat, but I'll take it off. It's enough promotion for Pinehurst. But thank you for being with us today. And thanks for kicking off day 2 of this summit. So, you know, what I found in the past is what people really want to get most out of these discussions is learning. You know, how can they learn from others and improve what they're doing? And you've done a masterful job in the past few years over at Bloomberg and obviously previously at the Atlantic and other places. So I think I'd like to start off, if you don't mind, by just asking you to describe your revenue portfolio. And in particular, how is it unique to Bloomberg, and how might it differ from others?
Well, first of all, thank you, Joe and Stephen. I'm excited to be here. Been talking about this for a while. I am pretty disappointed I'm not in Pinehurst as an avid golfer. So perhaps another time. You know, we clearly have a very diversified, multi-platform revenue portfolio. I think most publishers do. I don't think we're radically different. Most of our revenue comes from advertising, consumer subscriptions, event sponsorships, and that's pretty much our mix. So it's not radically different. I think, you know, to be honest, one, you have to do that. There's very few publishers that have a market dominant position like a platform might have, or a monopolistic position where you can protect your business easily from new entrants. So you've got to continually be, you know, diversifying and figuring out new revenue streams. And I really think for us, the formula has been truly invention-led growth. You know, I'm a big fan. I got inspired when I was at the Atlantic by the writings of Clayton Christensen and disruption, innovation theory, really just like somehow hit home with my entrepreneurial background and spirit. And I obviously read some books and met some of his professors that did that research. And I really got fascinated by this like sustaining versus disruptive innovation breakdown. And what, you know, I think the difference between what I've seen at various publishers, and I've been at a bunch, Condé Nast, Time Inc., the Atlantic Media Company, Bloomberg, Yahoo as a quasi-publisher, you know, is that there's so much focus on sustaining innovation, making products better, operations better, all very important stuff, but less of a focus on big, bold ideas that open up new markets, open up new revenue, open up, frankly, just unlock new value. And so that's where I feel like, you know, we've been able to differentiate. We've launched a bunch of new things over the last, I think it took a couple of years to get our feet settled at Bloomberg, huge company. I think we're up to 25,000 employees perhaps now, wildly successful. To part of your question, is it helpful to be part of a wildly profitable B2B data and information leader? It is, for sure, but probably less so than you might think, in the sense that we don't ask for huge investments. We're very frugal. Justin and myself, our CEO, Justin Smith, myself, grew up kind of launching businesses without a lot of capital, including at the Atlantic Media Company. And so we don't necessarily use what is possibly available within a Bloomberg LP. We try and do it in a very scrappy entrepreneurial way, but we've been able to launch what we'd call a Davos disruptor in the New Economy Forum. We've launched what I would call, frankly, a CNBC Bloomberg disruptor, Bloomberg television disruptor in Quick Take, which I'm sure we'll talk about. We've launched brands like Green, Equality, Wealth. We've launched a paywall, which I wouldn't call a disruptive innovation. We were just kind of late to the game, but it required a lot to get that out there. And that's really underpinned this 35-40% growth that we're going to see. And we're not small. So that's like Silicon Valley growth, not traditional media growth. And it's coming off of these new things. So that's why I'd say I see a little bit of a difference. We're leaning into disruptive innovation more as sort of a relentless focus on, and Justin gets credit for driving us all to think this way. And he has my 11 years working with him. What's big? What's happening in the marketplace? Where are we going to strike next? Who's vulnerable for disruption? Where's the money flowing, right? And that's the way we think every day. Could be exhausting actually, but that's what we do.
Well, I admire your approach to a good defense. The best defense is a good offense, and disruptive innovation. But it's not in terms of your revenue stream, because as you established, it's mainly traditional advertising and subscription revenues. But the disruptive innovation comes from creating new products, creating new audiences, basically line extending the Bloomberg brand into new audience markets.
Yeah.
Is that correct?
I think that's right. Yeah. I mean, there's only so many ways to find revenue. Right now, a big chunk is advertising and sponsorships. And subscriptions kind of makes up the bulk of it. We do have a licensing and partnerships business, which I'll talk about. It's sort of our B2B within our B2C business, which I oversee as well, and that's growing in a different way. Yeah, I mean, I think it's more about segmenting for new audiences, creating models on new platforms, thinking about new regions, thinking about new ways to engage, more so than trying to create a whole new way to extract dollars from the supply chain. It's the business isn't super complicated when you're in publishing. You try and write great stuff, and hopefully, if you're lucky, your customers pay you, and advertisers want to reach those customers because they're important. And when you're in business media, of course, they're very important because they're the decision makers. They have the budgets. They're generally affluent and educated, so they're probably the most valuable target audience that there is, really. So
with the exception of Business Week, it's almost all been homegrown product development strategy. Yeah,
I think that's right. All basically over the last 5 or 6 years that has led to this amazing growth. I mean, we will essentially double the size of Bloomberg Media again. Not a small entity over probably a period of 5 or 6 years, and I think ultimately, if you've heard me speak, or Justin, or even David Bradley, where I think we really hone this, it comes down to kind of inserting the right type of thinkers, mindset, and talent to do it. It is very different. Entrepreneurs are very different than what I consider more like corporate operations people. You're always, thinking about what's next and trying to build something new. It's just a different mindset, and I think we have that. But that's where the growth's coming from, and that's what I just don't see enough of, even when I was in these organizations. And part of it's not anybody's fault. It's institutional. It's organizational. It may come from the top, even. So
you have a culture. I remember working at another trade publication some years ago. Won't name it, but it rhymes with Sad Age. And at that time, the publisher asked me to try and develop a new media vertical, right? And there was a lot of discussion internally. It was a very reactionary organization, but a consultant from the outside said something I never forget, which is, you're better off cannibalizing yourself before somebody else cannibalizes you. Is that part of the logic here, which is going back to the best defense being a good offense? You have nothing to lose by fragmenting your own audience segmentation, because you're going to grow incrementally.
Yeah, I do fully believe in that. And there have been some, I think, luminaries and successful executives that we all look up to, whether it's John Chambers, Jack Welch, Andy Grove, Mark Zuckerberg, maybe not. Jeff Bezos for sure. And yeah, I mean, there are not a lot of barriers to entry in the business that we operate. So if you stick around a lot for a long time doing what you do, someone's going to come around and do it better, and do it fresher, and do it with less baggage. You know, I remember the conversation. So you absolutely have to have that mindset. Having said that, it is not unusual for people within my own organization to say to me, well, that will cannibalize what we're doing over here. It happens all the time. You can imagine the B2B side of the business doesn't want the B2C side of Bloomberg to get too aggressive with the news and information from our terminal business, right? So we deal with it for sure. We luckily have a CEO founder who is an entrepreneur who tried to disrupt Wall Street, did disrupt successfully Wall Street, and who believes in that. So it really is a mindset and a culture that comes really from the top down and provides air cover. There's, because the internal cannibalization threat is actually ridiculous. It's a red herring. And as you say, if you don't do it, somebody else will. So you're better off doing it. So, but anyway, that is a real thing. I've seen it a lot, and you just got to kind of push right through it, honestly. And rarely have I launched something that actually ends up doing that. We've launched Equality and Green and all these different brands, and ultimately 1 + 1 has equaled 2.3 or 3. It's grown the pie.
When I look at your portfolio launches and I think of the term disruptive innovation, I think TikTok, which morphed into Quick Takes, probably the most radical in the sense that using a social media reach to build a new audience among young millennial investor types and business types. How has that worked out? And also, can you talk a little bit about the transformation of it from TikTok to Quick Takes?
Yeah, I will. This has been certainly a project, pet project of mine. I've been deeply involved in it since since Justin said, hey, you put Bloomberg Television, the coverage of the elections and the Comey hearings on Twitter, and a lot of people watched it. There's got to be a bigger idea here, isn't there? And I went back and thought about it and came back with a business plan here, which we ultimately pitched to Anthony Noto, who was the COO of Twitter at the time, and really was driving this whole push into video, push into premium content on the Twitter platform. So anyway, we came up with the idea that this audience wasn't being served as well as it could be, premium video-based, social video-based content. We knew that Twitter was an amazing platform, sort of the marriage of great content on a great platform with, at the time, 125 million daily active users, generally there to consume news and updates. And we felt like that was the real-time news network of the world. And so we pitched the idea of kind of merging these two things together. And we were off to a good start. We had launched sponsorship. We were working, and this is a very rare thing. We continue to this day to co-sell sponsorship with the national and international sales teams of Twitter. Most publishers never, ever work closely with a platform the size of Twitter and co-sell, but we do. We have 4-legged sales calls for many of the clients, and it works out actually better than you think. So we launched. We were doing pretty well, and then of course this little app where you can do quick videos set to music launched, named TikTok. We were called TikTok with a C. I didn't think much of it until my mother pinged me that we were in Times Square for New Year's Eve, and I realized that they were buying advertising, spending a lot of money on advertising all over New York City. And so it took a little while, but we did shift the name to Quick Take. That was actually much more seamless than I expected. A lot of trepidation on the team. We had invested in the brand, but frankly, it was so young, it didn't matter. The bigger, frankly, pivot for that business, which happened in November, was moving from strictly a social distributed video news network, which was mostly aligned around business news, was moving it to social plus streaming. The business plan from the get-go believed that there'd be a huge pile of money, which there is, moving into streaming, OTT, connected TVs, that was the future of television, for easy to see, frankly, and it was just so well protected for so long, but it was about to come unraveled. And I wanted to make sure that this new news network would be set up with a very sort of modern streaming platform. So we were always doing that. The pandemic made it really challenging. We ended up launching it in November in the pandemic, which in hindsight, I'm glad we did it. We needed to get out the door, look at the data, make adjustments, which we are now doing. You probably heard in our upfront, we're launching 4 talent-driven shows. That's just the beginning. Chris Paul, Scott Galloway is going to anchor a show for us. Emma Barnett, we just signed, who runs a morning show for the BBC, and Imran Ahmed, who does the Business of Fashion brand out of London. So we're going to have these kind of weekly talent-led shows and grow from there. They're very sponsorable and they're going to drive a lot of audience. So we're sort of evolving it now. The revenue of this year for Quick Take, both social and streaming, will be up 250%. And so really, you can only go so far doing this is my view, a distributed video play on someone else's platform where you pay a toll or share the revenue. And so OTT provides us, you're still on someone else's platform generally, whether it's Samsung TV Plus or Roku or whatever, but generally you can own your own inventory and keep 100% of the revenue on the inventory that you're allowed to sell against. So owning our destiny a little bit more was always part of the plan. It's working well. We're lining up a big new investment, and I think, frankly, the sky's the limit, because the dollars shifting from TV haven't fully realized a lot of this money is digital or video, social video that's moving into OTT. It's not. You're not seeing the destruction yet of the television advertising business, the traditional television, and so we're in a good place if we can continue to develop it and grab an audience. So it's going well so far, Joe.
Well, now that you have a foot in the streaming waters in that way, obviously you've extended your reach. You have some great talent coming on stream soon. So it's initially and maybe long-term an advertising video on demand model. Are you looking at a SVOD model at all? And I would think Bloomberg, given the fact that you have the ultimate premium content in the terminals, would be a natural play for subscription models.
I don't think that the market will bear Bloomberg Quick Take as a subscription product for quite some time. That's my honest opinion. I wouldn't rule out anything. We've all been wrong so many times when we're too definitive about what's going to happen. But I think right now, with the plethora of choices out there, I mean, go to Samsung TV Plus or Tubi or Pluto. There's a lot going on there.
Sure.
We obviously don't have the type of content on Bloomberg Television or Bloomberg Quick Take network that that Netflix and HBO Max and or I should say Discovery, Warner Media, or whatever. We don't have that kind of entertainment, high production movies and shows that people will absolutely pay for and continue to pay for. So we think the best route is to provide a really great new business channel for this audience, get enough audience in there to monetize it appropriately and scale that around the world, and stay with that for now. 3 years from now, could we think about bundling that into our consumer subscriptions, and you could maybe offer it a la carte for $1.99 with no ads or something? Maybe. No one will confuse us though for Netflix or whatever. So I think the route to diversifying Quick Take won't necessarily, certainly in the short term, be on the consumer side. It'll probably be through multi-language support, bigger and sort of global distribution partnerships, and perhaps moving into live events. Could Quick Take do a convening like Aussie Fest or Comic-Con or something? Maybe, maybe disrupt the old Aspen Ideas Festival I used to work on with the Atlantic. So I think there's opportunities to take that brand as we connect with people and create these other revenue sources, and then we will do that. We have those, in process, at least in the thought process.
Well, I understand you already have a pretty ambitious global distribution and partnership strategy. You didn't talk a lot about licensing yet, but So obviously advertising and subscriptions are the lion's share of the business, but what other ancillary revenue streams are you developing? And, I mean, do you just straight out sell the Bloomberg name for licensing? Are you developing products related to that, et cetera?
Yeah, it's a pretty big business for us. We have over, I think if you count every client that our media distribution team works with, and that includes, pay TV carriers, all the way to local newspapers that, license a few articles a day from Bloomberg, and the big partnerships we do, which I'll talk about. There might be 900 partners, and we've got a team of, I don't know, 50 people out of London, New York, Hong Kong that manage that. And so it is a big business. It's also kind of a traditional and somewhat mature business on the straight licensing side. And so, as you know, we've been pivoting quite a bit on like bigger branded partnerships. We just launched one, or announced one. It's not launched yet. It will be in Q3, called Bloomberg Linnea. This is with a very successful family and man named Leon Fallick, who owns a diversified set of holdings. But Leon believes, and we think there's some interesting, we support the idea that there's really no modern premium digital pan-regional business play across Latin America and frankly Iberia as well, Spain and Portugal, which are major trading partners, of course, of Latin America. That they're more regional right now. There's our partnership in Mexico, like with El Financiero. There's Brazilian and Portuguese partners that we have and that do work just in that market. So he thinks there's a play across because there's a lot of trading and commerce happening between. So that partnership, getting to we don't just give the name away. No, they're actually, first of all, we spend a lot of time making sure that we're comfortable with them operating under our name. That means due diligence, financial diligence, all of that to make sure that this partner will not, let's say, harm the brand or harm our overall business. Remember, the Bloomberg Media is not the biggest business within Bloomberg LP. I think everyone knows that. In fact, we were really started as the marketing team for the terminal. That has evolved dramatically, over the last certainly 5 or 6 years. But so we are really a standalone division business now that will be making money. But we make sure we have the right partner that's not going to embarrass us. And Leon is great. We really like him as a partner who's willing to invest, has a smart business plan that follows our editorial values and guidelines. And so, the contracts we sign are very comprehensive, and partners understand that. And then we work with these guys. So it's not a set it and forget it relationship. Take the brand, do whatever you want. We assign editorial oversight. We run audits. We do strategy sessions regularly. We actually want them to be successful. Generally speaking, I'll structure these deals so that we could benefit if they're wildly successful. It's not just like a flat license fee. And it really extends us in parts of the world that we're not well known. These partners know the culture, the language, the region better than we do. I mean, how many business executives in Peru are going to sign up for a $450 English business media platform like Bloomberg.com? The answer is not many. I know, because I looked at the data. So, this gives us a chance to really brand Bloomberg, to make some money on regions where we couldn't operate successfully. And it generally works. I mean, of course, there's risk to it. And of course, sometimes these partnerships don't work. Sometimes our partner gets himself in hot water. We've had one that has gotten himself in hot water with the government, which, slows us down. So, but we think it's a great business. It's growing. It's more like a 5 to 10% growth business right now than a 35% growth business. And that's okay, though. It's stable and it's connected to some of our other strategic initiatives.
All right, well, I think we're going to open it to questions in a minute, but if I could just transition with one, what's the new next for you? I mean, you're a disruptive innovation guy. So, I mean, there's so many new areas of media opening up, whether it's NFTs and the blockchain or, Twitch and this whole gaming metaverse. I mean, are those market potentials for you, or how do you think about where you enter or take your next big risk?
Yeah. It's a good question. I think the comms team would fire me if I share the full roadmap, of course. But you know, we generally look, so we know who we are, and I think that's important. Like, we're not a business media publisher. Of course we are, but we're actually our mission is more around how do you arm executives to be successful. And so that gives us broad license. That's not exactly our mission statement, the marketing team would kill me, but like that really is that's how I think about it. Our target audience is executives, and yes, we can segment them by age and demo and region, but how do we make them successful in career and life and wealth? You know, like that's the plan. And so therefore it opens up a whole terrain of areas to go. And platforms to go. We could talk about job boards. We could talk about networking globally. We could talk about moving on to, you know, heavily into the audio space with podcasts and doing some entertaining investment advice there. You see a lot of our deals that are announced. We're sort of all over the place with those announcements, but they all sort of come back to a few different, like, I guess, characteristics that are consistent. You know, we look at, does this make sense for our brand? Can we play there? I'm not going to launch a mobile telecom company, and I'm not going to take on AT&T any more than AT&T should probably take on a content company. And that doesn't fit with what our mission. We look at where the heat is. There's a lot of money pouring into video, social, and a lot of engagement there and a lot of attention, social, video, OTT, streaming. Obviously, we're playing there with QuickTake and Bloomberg TV. There's a lot of heat around podcasts, even if the business is not huge. We like it. We're making money there. We're signing deals with iHeart to produce content. There's a lot of heat around the SVODs that you brought up before. What do they have and what do they need? They have a lot of money to spend on content, which is how they're going to stay ahead, and they need great content. Well, what do we have? Well, we have IP. Business Week writes amazing stories, great long form narratives that could be turned into documentaries, right? So we're looking at that, so there's some heat around that. We are predominantly, for Bloomberg Media, English speaking platform or English language platform. That blocks off a big chunk of the world. And now you can use Google Translate or whatever, but we're not really catering to huge swaths of executives around the world. So we might be looking at doing a little more local language translation, either through partnerships or through our own capabilities. We do happen to run a Japanese website, bloomberg.co.jp, which has 4 or 5 million people on it in Japan. So could we launch more in that space? 100%. If we're truly the leading global multi-platform business media we purport to be, we're going to have that kind of multi-language support. So I see a lot of heat there. I see, I don't know about for us so much. The lifestyle side is interesting. Obviously, New York Times with Wirecutter, and I think I saw Vox Media doing some more stuff on that front. There's this affiliate. You have a session on this. Our audience has a ton of money. Our audience buys Aston Martins. Our audience buys high-end whiskeys, and so they travel to Africa on safari. They spend. So right now, we might take that advertising and we might write content for our Pursuits brand. Could we be involved in the transactions for that and get a commission or be some kind of e-commerce affiliate revenue? Maybe. It's not really our brand, and I don't know that it scales super well, but I like the idea. We're dabbling around with some of that stuff. So those are the areas, but I think there's more room to go, with segmenting our audience in categories. Green, City Lab, wealth, equality for us, which kind of fit underneath the Bloomberg banner, are all doing really well, like from an audience and sponsorship, and they're helping to drive new subscribers. So could we go into esports and gaming, crypto, all these different, we do cover this stuff, but when I say go into, I mean lean into is like a business line. Yeah, potentially.
Okay. Well, I don't see any other audience questions unless Steve and Lisa see any in the hopper.
Yeah, we have a couple. A follow-up on the QuickTake and TikTok project. What are the infrastructure requirements for that? In terms of, is that a separate team from the rest of your video operations? Does that take a discrete skill set?
Yeah, I think yes on most of those questions. So I actually incubated the TikTok / we'll call it Quick Take because that's the brand name now, Bloomberg Quick Take, in a separate Bloomberg building for months, maybe 6 months, just to keep them away from the daily grind of running a large media company. And I would spend like afternoons over there. So we built a separate team. We kept them away from all the distractions of running a normal business. We did secure some investment support from the company, though a whole lot less than you think, because we ended up, this is a model that we use time and time again, which is to go out to the ad market and say, do you want to be associated with this? And talk to the brands that we think will be a good fit and get them to help sponsor this from the get-go. So we've got sort of revenue before this thing is 6 months old. We did do that here. We do that all the time. And so, yes, we broke it out. It is a team roughly of 100 people that are independently working on Quick Take. They leverage, obviously, the infrastructure that we already built for Bloomberg Television, meaning the studios, master control, content licensing, graphics department. So we are able to use that, which many people don't have, for sure. That made it easier for us to get up and running quickly. And we obviously have one of the largest newsrooms in the world to draw content from. I think we have 2,700 journalists across the world. So if you wanted to go live in Ghana on a story, we probably have a reporter there that Quick Take could call on to get in front of a camera, even if it's like a handheld. So those are advantages that not everybody has, for sure. Anyway, so we set that up separately. They sit on a floor by themselves now in the Bloomberg headquarters and use the same facilities that Bloomberg TV. I think there's frankly more collaboration we could even do in the outer markets like London, Sydney, Hong Kong, where we do a lot of programming for Bloomberg Television to follow the sun. It's also, you have to be very, very careful about taking a new project and dumping it into a kind of a legacy project and losing that entrepreneurial spirit. But those people it's a different crew of people too. I didn't mention that, but we hired more from Vice, BuzzFeed, Vox, Twitter than we did from CBS News for the Quick Take project.
And also, we're about to move into talking about paid content, but I wanted to hit that topic since you guys have had some really quick success in just the several years that you've been using the paywall at the site. You've got over 250,000 subscribers, and I understand from Justin that you're really bullish in this area. You expect some real great growth there. What have been the dynamics of that stream for you in terms of what are the triggers for conversion? What have you learned about converting people into paid subscribers?
Yeah. So first of all, yes, big business. We value the market for sort of high-end like business journalism at about $1.5 billion. You add the Journal, the FT, the Economist, maybe you throw in a little bit of the New York Times. It's a big market. So we're just getting going. I think Justin we've said publicly that it'll be a $9 million business roughly this year. You can do the math there. It's large, and we have a small piece of the market. What's interesting about what we're seeing, first of all, I would say the biggest lesson, and I've launched paywalls before at Time Inc. and we dabbled in some stuff at the Atlantic back in the day on Kindle and other places, not necessarily the website, but we were going to do that before I left. Frankly, it's about forcing them, hitting them into the paywall and forcing them to pay. That's a big lesson. So there's this trepidation from every publisher about putting a wall up because you'll lose your audience and you'll lose the ad revenue piece. Mistake. Just put it down. If you have a value proposition worth paying for it, and not everybody does. We certainly do, and we certainly get some corporate credit cards for sure. But the people need business journalism, they're willing to pay for it. And this audience has some disposable income, or their company has some disposable income. So that's the biggest thing. As we've lowered the paywall, I think we started at 10, and then we built this dynamic paywall depending on who you were. I'd say, well, 1 now. Like, just bring it down, and people will finally say, oh, it's worth it, I will pay for it. Or they won't, So that was 1. 2, it's the I found that one of the biggest converters, frankly, in our space is wealth and making money. So if we have a piece on here's how to, we don't really provide like stock pick, that's not our play, but how to think about Ethereum versus blockchain, for example, which we just did. That was the highest converting article that we had for that entire week, I think, for sure, because that's going to translate into making money, hopefully, for you. I certainly used it, but so I think we find that those more utility articles, not the general news stuff like the market's down 3%, or like deep in-depth reporting on Apple and the latest earnings, stuff that can be used from a business or a personal wealth standpoint. For us, those are the biggest converters.
Which means we're learning a lesson that we learned 20 years ago. Joe and you will remember this. The mantra 20 years ago when we first started talking about paid content is, what will people pay for? Things that will make and save them money.
Yeah. No one's changed. That won't change. That's actually why I simplify our mission statement all the time to what can we do to make executives successful in life and in their career, period. We can put all the other marketing language in there, but like, how do I arm them? I want our platform and our products to be utilities. Because if you're a utility, that means someone really needs you, and it's not a like nice to have, it's a must have. And so that's the stuff that really gets people over the edge when they hit that wall and they say, shit, I need to try all this at the very least because I need that article.
Do I really not want to know that?
Yeah.
Joe and Scottie, thanks so much. Joe, what's your screensaver back there? I want to get that.
Oh, yeah, that's just the default Roku screensaver. I try to keep the MediaPost live one up, but it times out. Sorry about that.
It's bedazzling. I love that. I love it. All right. Thanks, guys, so much.
Take care.
Thank you very much. Have a great summit. See you guys soon.
Thank you.